Crypto friends, how are you? Yes, we are back and we're going to take you through the likes of Bitcoin to start off with. This is the God market. This is the one that we need to at least hold its ground and ideally move somewhat forward to allow the altcoin run to happen, or just to get right on up and move fast itself so that we can be holders of Bitcoin and making money again. What's ever happened to this bull market? We haven't spoken to you in a bit because there hasn't been too much going on. We did, however, over the course of the last week, get our people out of crypto just on account of a softening economy, a dominant dollar, and the potential for downside of an extra normal size in a demand destroying event, potentially, were it to happen. However, that doesn't mean we expect it to happen. There's just a slightly higher risk of that. Policy errors by the Fed. Suddenly we have, and we've mentioned, we speak often of trends in data. In the last couple of months, the data trends have been soft, economically soft. We first had the everything is awesome, and no, you're all calling it a difficult economy. We've never had it so good. Red hot labor market by Powell, etc., etc., etc. And actually, we've had a gold and silver run as well, which has also reached a point where it's resting a little bit. And now we've had this dollar spell. Now, Bitcoin doesn't like a strong dollar. Most things don't. That's risk on of nature, apart possibly from the equity markets. If it's inflows, foreign inflows, such as that hedge fund, that global macro hedge fund, the Swiss National Bank. Fancy that. Anyway, apart from that obscurity, what's going on with Bitcoin? What is crypto going to do next, generally? Let's have a look at some of the charts with you. So I've taken all the lines off. These are just alerts sitting here. And here's my larger overall view of what I think might happen next, plus what we thought might happen that isn't going to happen, and other things we think could happen that's still in the run for happening. So there's quite a bit to cover in all of that. Overall, my suspicion is the following. We are still in a macro bull market. Therefore, I expect continuation to the upside in most scenarios. However, there's one key point that must be mentioned. The last bull market actually shot up from the 10K mark roughly. However, it had a spill prior to the commencement of the bull market to the 4,000 level. That was on a demand destroying event, which you all know the name of, March 2020. And in fact, the response to that crisis was the absolute turbo juice that saw you run up, take out the 20K highs and end up at a 64K high. After which you then had a 55% pullback to 29K before making the 69. So for me, very much the bull market ended at the 64, even though there was a marginally higher high that followed. That was the juice to get the 10K to the 64K run. That was the really strong high momentum. And it had a weak dollar and proliferation as its driving wind. We've already had the ETF play out, and that's brought in institutions to a degree, but right now there are no real major bull drivers, and there's a pretty firm dollar, which we'll take a look at the moment. So here's what I think is probably my most likely scenario for what happens. That was a pullback. We would call that a first impulse. You've actually tapped out twice. This is a double top, actually. We'll come back to that. And you're in a grinding downward move, which, because of my time frame, I prefer not to ride it down, especially as it could go, to 59K. Don't forget, it was as high as 72K. So, I mean, even if you're getting out at 69, it's better not to ride it down to the low 60s if that's what you expect. And I do think there's a fairly realistic chance that'll happen. However, my overall scenario is that you'll get something snappy returning you back up, and that in actual fact you will have some form of a structure like that could be very, very positive and give us a beautiful upside hunt volatility funnel breakout to the top. And there's nothing I would enjoy more than the God market of crypto to set up in a squeezy Japanesey, yes, why not, with three juicy little impulses, and to take the upside break that will be implied by that. Remember, we'll get a real target, We'll get interims, first and second interim levels, where it's likely to rest, and that'll allow us to do some pretty aggressive leverage trades with known risks. In the way I've drawn it, that would probably be your stop. Maybe the pink line would come a little bit lower like that, for example, in which case stop might be a tad lower. But we'd look for the breakout of the high to point to the fact that the volatility is now expanding. So what you're getting at the moment, remember what we're doing always in these, this is a volatility constriction. So you're getting decreasing resistance. In other words, it's coming lower. The profit taking is coming sooner, and at the same time you're getting a tightening and a firming and a building of the ladder. It's quite important in crypto for people to understand how markets function. You essentially have a ladder of bids and you have a ladder of offers. Now many people, most retail, just hit the buy at market button. That means a lot happens at the core level that is currently the perceived value, and then when you get a move, there isn't much building up of pending orders. Institutions' involvement usually leads to a bit more sensible behavior that sees ladder development. In short, people don't feel they have to be in that very second, and if they think the market's coming down, or there could be movement both to the upside and downside, they will choose a price that they feel represents a better entry. And this is the more selective buyer who's asking for a price. And this goes with the limit order. So what can happen after you've had a very strong move, as we've had over here, running you up to the 74, which is actually the new all-time high, some time ago, is that you've had a big move and there's been no new bid development. The market's all trading at market and it's moving up so quickly. There's been no depth in the bid ladder developing because everybody wants and needs to be in. There's real momentum. Retail is particularly known for momentum chasing, hence the phrase of fear of missing out, which is FOMO, and momentum chasing. And like dogs that chase cars and bark, and then when they stop, don't know what to do with themselves, feel vexed and sit down, take a crap under a tree or do something otherwise, that's retail. You know, they don't think, hold on, this car's not always moving, and in actual fact it can come back in the opposite way. Don't chase. There may be, at some point, some form of a pullback. So what's happened is you got one pullback, it's pulled back as far, there became a bit of fear, so there was some components of capitulation in some of this. So you can see over here, near the end, you often get a final capitulation. You had quite strong selling there from the localized high. The first knockback wasn't that extreme and you got a rally, and we were at one point asking. So when you get congestion, it's much harder to trade. You're going to be incorrect far more often. And we've been incorrect a couple of times during this period. At one point we thought, look, there's a lot of buyers coming under here. It's possible you could break out as part of this. And we thought, okay, there you go. Could that be a breakout? Wrong. Just didn't happen. In fact, your first selling leg. So this pause period after making the new high has actually been quite extended. I just want to highlight to you all that this is roughly March. And what are we right now? We're heading for the middle of summer for you Northern Hemisphere friends, which most of you will be, and for our Southern Hemisphere friends, the middle of winter. In other words, they will be heading to summer soon in 2 days' time, and the days will be getting longer. And you know, that's quite a long time ago. March, I mean, this is pre-Easter. And here we are today, and in actual fact, we've been consolidating and tightening for quite an extended period. And if you look at the 20K run, you'll notice it was rather short. Why? Because you had the turbo juice of the proliferation, and you were in a real breakout, and you'd already had the oversell of the capitulation that ran Bitcoin from the 14K high right the way down to the 4K. So there was a real gut bleed out of weekends to the 4K, and then the drift back up to the 10K was fairly firm. Then we paused for a while, and then it really happened and blew up. And that was the charge. Right now, we don't have that degree of proliferation, and most of the big advances on Bitcoin have come during a period while the dollar has been weak and there's been some form or degree of proliferation. Don't forget, 2009-10 was the bottom of the crisis, and quantitative easing 1, 2, and 3 all took place in 2012, 2014 and those eras, early parts of the establishment of Bitcoin. I was not not an original gangster. My involvement was only from 2016 and was only on the radar a little bit in 2015. And I thought, like everybody else, it's just gamer money for buying a new gun to shoot baddies in a virtual world. So subsequent to 2012, we got 2016, which was the Shanghai Accord, which was a major crisis and quite a lot of concern. That was about China getting hyper indebted and doing essentially their version of subprime on the property market. So they created heat after the West subprime by borrowing and extending into great debt, and they did the same thing. You see, we've all got to join the leper colony and be super indebted for the all fall down that is coming our way. And as a result, 2016 led to the 17 bull market that peaked in December of 2017. Then you got 2020 that set up the 21 highs, the 2021 highs in gold and silver. What was Bitcoin doing in 2021? Well, let's just remind you, this is a daily chart. Let's go back out here and we're going to wipe our face a little bit. So 2021, you were making your final 69K. There was 64 being run, the pullback, and that was peak bull. That's basically 17 plus 4 years for the halvening. Now we're 2021 plus 4, 25 probably being close to the top. Not necessarily the beginning. You can see in 2021 you had a small pullback and you still went higher. So during the year of 2025, it's quite likely, if all things being as we expect, that the high will occur. Of course, the halvening's already occurred for Bitcoin, and I think it was earlier on this year, and I'm getting a bit fuzzy on it, and it was very much the same as here. So 2025 is still on target for the new high. However, I wonder, like the sell-off that occurred here, we've already begun our bull market, and in dollar terms, we have taken out the previous high, just not in CPI adjusted terms. We're still below, and I have shown that as well. So it's quite an interesting one. We're lurking just below that chart, and I'll just remind you of that again because it's kind of fun. AUCSL, that is Consumer Price Index for all urban consumers. So that's probably the most encompassing one. And if you have a look at that high over there, which was the 69K, you're at about 248 and you're at 206. These numbers mean nothing because it's Bitcoin price divided by an inflationary part, about 235. So we are unders. And this is all probably a true winding up to, in adjusted real terms, to smash into a new Bitcoin high. So we suspect that. However, we need a driver, and we need some dollar weakness for that driver, and we're not sure where that comes. And often, before you get dollar weakness, you get a surge in strength, and then because there's a crisis, and then you get proliferation through the euro-dollar market or just through the Fed itself. So that's where we're at in terms of our expectations. So it could be a simple continuation structure, or there is a risk, and that becomes live once you run that low, of a bigger dip needed first before, which could be crisis driven. It could even be really big before you can turn and go up. And that would give you more turbo juice if we get proliferation. Who knows? That remains to be seen. That could be bank collapse. It could be Nvidia fraud and the whole market cap collapsing there, and the NASDAQ and bailouts and whatever for the chip company deemed as a national strategic corporation. Who knows? I can create all sorts of names. Russian hack, blah, 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 blah. Korean, the North Korean hack, an escalation in Gaza, Israel, Ukraine, Russia, you name it all. There's lots of ways, there's lots of downside risks, possibilities, too many to explore. But they could happen as well. So we're sitting in a bit of climb the wall or worry situation. However, overall, I think the first one is more likely, but then you won't necessarily be ripping. You'll continue to work your way up in much the way we have. Whilst you'll note that once you had full print proliferation, you had some really, really expansive days there. In fact, I should go from there to there. You can see that that was super, super strong in a very short time. And you literally had virtually no red candles, tiny red bodies there. That was just in and around the 20K. And you went from 10K to well through past 45 on the way to 64. And that was helped by the weakening dollar. So we will have to have a look at that dollar to take it further. But if I'm right on scenario 1, no major big demand destroying event, Bitcoin becomes an interesting buy roundabout here. So let's take the CPI element out of that and go back to dollars so that everybody knows exactly what we're looking at. So a little bit more of a sell. It starts to become when you get the localized lows. You can see structurally that there were a number of localized lows here. There. There's quite a few localized lows. That's obviously the absolute. And at that point, running that low will mean not an HVF winding up continuation structure. It could be something else. You could get a falling wedge. You could get other things come into play. That could mean lower lows. But you could also get that capitulation. That could be a bit scary. But we think roundabout, you can see from these localized levels here where we're talking localized lows from around 58 to 60 should be a very good normal entry point, stock placement there. In other words, not a winding up structure. There's a couple of things that have happened during the formation of this, apart from it's taken since March to where we are today and is still not in a breakout to new highs. So I'm going to just show you some draws. There's some draws that I did that need removing that I think weren't good anymore. So let's just go and grab Bitfinex because I had some calls that I want to say are fails and I want to own them and tell you about them. So there was a possibility of a very weak right shoulder, and that's the problem if you have a very weak right shoulder. I mentioned this before in a previous update. If you don't have enough final sell to exhaust that selling and you break too soon, too early with a very fine right shoulder, that selling never fully took place and it comes back later to haunt you. And that is exactly what's happened here. So too much rush in during this period, over eager, and then you get stale out. And you didn't have that nice seller's exhaustion, proper dip there. And there was always a risk on that right shoulder. So that right shoulder has been invalidated. So we're saying no more is that a valid pattern and it's a fail. And we did put it in front of you and say this possibility exists on a run to the 80K. Not happening, yes. You will get it, I think, in due course. But certainly it doesn't hold now. So all those elements, I drew that only on my Bitfinex chart. But as I mentioned it, I wanted to take that away and show it to you and say that is a fail and it's not happening. And that's kind of, in some ways, good news. You might say, but that's not good news, Francis. It's going down instead of going up. And you know, one of your scenarios that you pitched hasn't happened. No, it hasn't. The good thing about the deeper dip here is that if we get to a purchase area zone around about these levels that I was showing you, the localized lows that have been captured here, here, there, on the and there. The good thing is that this becomes a very strong entry with quite a low risk. And the upside potential of this will be quite substantial. Up top here, you're at in and around, let's call it 74K. It wasn't quite. And down here is 56 and a half. Let's call it 57, shall we? Let's just call it 57. So 74 to, it's 14 will take you to 60, and you get another 3,000. That's $17,000 in difference that you lost. That becomes our amplitude. So that's the height of the column from the high to the low. That, what did I say it was? I think it's $17,000 approximately becomes our future projection from what would probably be a midpoint, dare I say, all the sixes, somewhere in the middle of the price gauge. And you get 14 onto no, not 14, let me say it correctly, 17 onto all the sixes. What's 14 will get you to 80, and then you'll have another 3. So you're looking at about 83,000 as a move. And you could be getting into that in and around the 61, 62 levels. So that could be a very interesting buy zone. I want to highlight that pullbacks did meet support at this point. A pullback met support, it met support, it met support. And only the final capitulation that had real venom but exhausted itself and was snapped back quite strongly back into the range for another test, which is what set up that possible inverted head and shoulder, is where I'd go stop placement. And for interest sakes, it's also the 56,000 original target that we called for Bitcoin during the 10K break. So we had a target of 56K. So you would have been in from 10 to 56, and it would have overperformed to 64. And you would have left 8 grand on the table unless you had overperformance, which we advised was the case. It was a first macro HVF. So you could have had a little bit more of that 8 grand, but you should have closed 50% of your position. All these things we teach and walked people through during that bull market. And if you wish to be part of that process, where we do daily updates, we have 4 webinars a week, or 3.5 webinars a week. You get daily updates from me in all forms, video like this, also voice notes and chart shares, and of course all our setups that we discuss inside the community. Just click the first link below should you want that. And that's all there. Wipe your face and go back to your chart. These are some of our setups actually. This is our internal for premium members community area. Okay, so what actually also happened inside all of this is that we did recognize that this was losing momentum and failed twice at the 72 level. So the 72's been a fail, and I want to highlight you've actually only closed once on a daily, and you've not closed at all at a weekly at the 72. So I can go back up the time frame, and you can see that only one day has ever closed above it, and it was immediately rebutted. So 72 is quite an interesting level. Remember, key levels are just round numbers. You just poke your nose a little bit beyond, you can blow off a little bit through. So this was a bit of a double top, and we often call them M tops. It was super fast on the way up, then it came down twice to this magic level. That was our 67.5. We called that a key level because of that right shoulder and then that small possible left shoulder. So a bit of a neckline. Well, it was a neckline, but not for the inverted head and shoulder, more for it, although it ran the key levels there as well. It was a valid neckline, it just didn't have the oomph to break out. But it also became a neckline for this M top, which is typically known as a double top right here, which has created and generated a downside target, which we've discussed inside our community, and I'm about to share and draw with you here so that you can see what our community has known as a possible down leg, where the target would be for that M head on that relative high 2. So this localized high up here, we're calling it relative high 2. That's the ultimate high over there. And you had a double top structure. So what did it suggest as downside? Well, let's draw it for you. It's quite simple. Let's draw it for you. I'm going to expand this a little bit to fill the screen, grab a bit more real estate, spread it out a bit, and just do that draw. So typically you take it from the high. These two were very similar. They were almost bang on. And so it's a proper double top in terms of this being a localized high. We stick our magnet on, we do the quick draw down, and this is Bitcoin. Oh, I've got the magnet on there. Actually, we don't want that, so I'll do it with a thick line so it pops a little bit. Now that's to the key round number, which is 67.5. That's the light blue. You see the light blue there, 67.5. Now you can do that, but it's also, it has gone a little lower. So I'm going to draw a second line from there all the way to the lowest point of the down cell. Let's make sure we call it. And that extends a little bit further. So what we're actually doing is we've created two geometries. I'm going to go back with that and just get this one to suck onto the bottom. There we go. Now we've made the bottom of the wick with the help of the magnet. So if we project those two levels, where do they point? And those are the two projections to the downside And you know, when I was pointing to the box, that points to the technical run of the 62K. We already had a blue line on there, by the way, that was showing what an interesting level that was. And if we put it on that, that's 63. Now, when I drew the box of where I was thinking technically of interest that it would be supporting, you may see that that actually was pretty similar to where I drew it. Remember, I did this, that, and that, and I drew a line through the middle of all that and said, well, that looks like the hard support, so accumulating in that zone may represent some value. So that's a small time frame pattern, but they regularly play out. They're quite consistent. Downside, you can see a couple of times you've attempted to rally, you've been slapped down. This so far for the week, that's the day though, is incredibly low vol. It's a very small range that's occurred during the course of today. So there's very few drivers right now in the market, and I would expect also volume has got kind of low. In other words, people just aren't searching Bitcoin. Certainly retail, the Google Trends is very, very low on interest on Bitcoin. Let's stick the volume on there and you'll see exactly what I'm talking about. I'll also put on balance of volume in there as well. We'll talk about that a bit as well. So here's your volume. You can see that the volume has come down immensely from the localized highs. So what have we done here? When you have a red candle day, that's a lower close than the previous day, the volume is showing in red. You can see that was a bit of a volatility. High volatility usually associated with high volume. Don't confuse them. If someone says vol, he's talking about volume, volatility. If he says volume, it's the amount of trade on the day. You can see the volume is drying up. Retail is dead in this bull market. They are not featuring very much, and they're bored. They aren't patient, and they're bored. This is waiting new drivers for crypto to move. However, if our continuation pattern draw that we've suggested does take place, we see, as I say, the 83. So even though I removed that inverted head and shoulder target, nonetheless, we'll still be getting a number around 83-ish. And I think this could be quite a pretty pattern. It could a little bit of overperformance on that one. So we have a drawing tool, and I'd like to do a bottom here. I might be able to do this. Let's see. But before I do the drawing tool, let's also talk about the on-balance volume. So when you have disaccumulation, that's high volume days on negative price behavior. You're getting disaccumulation, lower, 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 lower. That means more days where the volume is big on the sell side. But at the same time, if you look at the moving average of that volume, it's getting lower and lower. So the scared money that had to run has run. It's now bots playing with each other. It's a little bit of and not too many active traders around. And unfortunately, exchanges don't make too much money in those circumstances, but we don't have to feel too sorry for them in terms of making money. They do all right, I'm pretty sure. So let's see if we can draw a scenario. And I'm going to demonstrate our draw tool a little bit. What I'm going to do is I'm going to have to lie because we don't know the future yet, so we're going to have to guess. We're going to say we are going to, this is not the last, in fact, it's only the 4th, and we're going to project. Now, were this to be the low, that would be our low too. Now, I don't feel that's the right call. I'd actually like to go back and see if I can do a 3 and suggest we're going to go lower. No. See if I can come right with this. No. So it's trying to draw. Hold on, I should have said 1, 2, 3. No, it's 4. I made a mistake. It's not 3, it's 4. That's why it's gone weird on me. Unfortunately, I can't change the 4. What I need, this 4th inflection, so that's your 1st, 2nd, 3rd, 4th. I would have liked it to be lower, so I'm trying to scenario guess. where the future holds, and I want to put my orange box as that relative low too. At the moment it's gone a little bit higher, but I've done quite a low relative 3, so it's kind of had a small rally, and we've dragged the pattern a little bit lower with that relative low 3. So it'll have a similar effect to our target, and you can see we're getting an 85 target on that guess up top there. So let's get rid of our OBV with thanks, and you can see lower volatility, lower volume, usually associated together. Possible target of 85. Now, of course, if this comes a little lower, we'll be able to move that in due course into our orange box area. Then we'll see how far up it goes, and that's going to be super informative. What's that blue dash line, by the way? The 68,958, which was the all-time high in dollar terms made in the previous bull market, which you've only just slightly surpassed. We've also got some volume by price. You can see there's been heavy volume on the mid-range to the high side. So this has been something that has been like helium bumping up. The helium balloon has been tapping and bouncing on the ceiling. It's not looking for the fall side. There's not actually been huge volume over here. It's not been everybody panic selling and there's a major stampede. So far, the bulk of the trade is in the upper third of the structure, which means it's leaning to the upside. This volume by price profile will adjust as more action takes place, especially if we're going to trade a little bit lower for a while. But this thick wedge still has a very, very strong prominence to the upper half generally of the trade. So this is more about the aggressive selling and buying that is taking place on the high side rather than the aggressive selling and buying that is a support test before capitulation into new lows. So overall, this supports our bull bias philosophy. So we're seeing bullishness coming, but not yet. It's a softening still with a new low, and then we'll make this black line from some point in here, possibly after one or two of these targets have been made, which will bring you into this key zone in the very low 60s that we think will be a good accumulation point and a very clear defined stop at 56. So that's around 4K. Let's say you paid 60,000. It's a 4K stop with an 85 going on 86K target. So the 86K, if you got in at 60, would be 26,000 upside, 4,000 downside. So I think, as you can appreciate, 4 into 26, it's going to be 24 sixes are 24. So you're getting a 6 RRR and some with an extra 2K odd on top of your 4. So about 6.5 risk reward for those entries in and around the 60K. So there is a bid opportunity for you on Bitcoin at 60K, and if you can get a 59 and some hundreds, you've just turned that 4K risk into 3,700, say, and now you're getting an extra 300 onto your 86. This does wonders for your risk reward ratio, which is what it's all about. So tentative Bitcoin orders at or just below, or the low 60s or just below 60, could lead to something very, very attractive. Let's look at some of the other aspects of crypto because we haven't spoken to you in a while. Hope you're enjoying this, by the way. We're going to do a full look at total generally for you in the crypto space. That's going to have a strong emphasis of Bitcoin, so I'm going to do the total 2. And the amazing thing about total 2 is it's very similar to Bitcoin, unsurprisingly, even though it doesn't have Bitcoin in it. Now, Ethereum hasn't really made proper full new highs, and we warned on our ETH Euro that Ethereum had just made a big target. Wow, it's been resting since that target, and we'll look at ETH separately in a moment, but it's a big component of crypto 2. It's total 2, and it's the biggest market cap therein. So understandably, you haven't made a new high. This hasn't made a new high on the previous years of 2021 yet. But this also meets our criteria. And in fact, you've seen our draw tool, which all our existing members over a year get automatic access to the minute we've stopped wrestling with TradingView to allow our guys to get something free. has immediately latched onto what I'd already drawn and has done for itself a 1.5 trillion call. So that excludes Bitcoin, which is at about 1.25 by market cap. Let's just verify, 1.275 total market cap. So that excludes Bitcoin, and this would see ETH at around 500 plus at that point, being the 500 of the remaining. So the rest of the crypto market cap in and around $1 trillion. So that means, and having advanced some as well. So this is also a structure that is holding on total 2 and is the DNA. So in short, we're actually saying it's not too far away. In fact, that's quite a decent RL2, but I do still think you can hang heavy and have another sell off and then another and then you know, it doesn't happen as fast as you and I want. It's just the nature of things, guys. There's no big drivers out there, and there's concern about the economy. And retail is wrecked. They're not going to move the market up. And the institutions are afraid and buttoning down their hatches. So there is still that risk that this could, instead of being an upside squeeze, could be a downside. And when we're wrong, we're going to be a full 180 degrees wrong. And it would be the only, and everyone goes, well, you've covered every base. You've said both up and down and sideways. No. Every time we get this discussion, we get someone that says, oh, I've learned nothing. You said it could go up or down or whatever. No. Impulsive moves, impulsive fast moves instead of congestion is far more useful to know that you're going to get an impulsive fast move. Because if you're not getting an impulsive one to the upside, you will be getting an impulsive fast one to the downside. The whole point is it's not going to remain in range and continue congesting. It's going to make an aggressive move. So you actually do have information, and only dumb people don't understand that we've actually imparted information. And every time I make these observations for people, I get some guy who's usually a troll, who doesn't get that, and then he tries to paraphrase, and then other people will read his comment and actually give credence to it. Okay, so impulsive major moves that will advance substantially away from a constraining, restricting, squeezing range, either to the upside or downside, is very useful information. Because if it's not happened to the upside, which will be confirmed by the break of the third high, it's likely to potentially crash back down and then be breaking the low side. So the fact of the matter is, if you go long when it does that, you're probably going to be okay for making target on balance of probability. It's had a real triggering event. If it just runs that, but then turns into a third, just a slightly higher third impulse. Now we have key levels we expect to be run. We have percentages and all sorts of theory associated with that is explained in our course content and by me on a daily basis and by our trade leaders and other people that will be teaching you across other markets, traditional markets, crypto markets, USA sessions, equities, commodities, etc. So we will know once that has moved and whether this is now a long trade or whether it's actually becoming more bearish. And we see signs. And it's still in the process of forming. So we don't have absolute knowledge about the future while something is still in the process of forming, and we don't have it even when it's close to the form, but we do get a very good probability sense of whether it's going to be an upside or downside. And as I say, we might need a new event to actually bring strength back in, and that might require a downside first. So we don't lock it out. We remain open to both possibilities, but it will be impulsive. That means you will have a fast move. So we will see when this third high comes in, it must be lower than these previous highs, and where the third low comes in, it must be higher than these. And once that's been done, we'll have a better idea as to direction, but it will be impulsive and fast, and it will be trade worthy. Because if you're going to happen quickly and it's going to make a geometric target that we can calculate, you get a fast move that reduces your cost of trade carry if you're using any leverage, and also gives you high rewards to very, very tight risk. And we like that. So we've just done a simulation of where it might turn. It could be a lot narrower here. So we have our entry there and our stop there. But we could actually get that funnel squeezed a lot more. It may not come this deep, for example. And we'll know that once it forms. So we're collecting information, and there is a trade brewing for which more information will still come. So good, that's total 2. We'll take you to total 3 because it takes out Ethereum's oversized influence, which means we've now taken out the 1.278 guy and the 450 billion, that is. So we're now dealing, the next biggest are quite a bit smaller. And you can see that total, my apologies there, oh, my camera stand is moving from leaning on the laptop. You can see from this one how much heavier the total 3 is, which doesn't include Ethereum or Bitcoin. And that's highlighting what most of you already know. The degens that got out of Bitcoin too soon, remember we gave you the Bitcoin dominance chart and said this is going to be Bitcoin driven, and then the ETF was very specifically a Bitcoin theme, when most of the power has been Bitcoin, and everybody got out of Bitcoin too soon, started dropping down the various alt chains. Now, there have been 1 or 2 winners that have outperformed Bitcoin, Sol, Ton, but most people have been in all the wrong ones. Like, I'm afraid to say, the likes of ADA that are now 10th. He says, some guys will go, he always mentions ADA. Why does he hate ADA? No, I don't hate ADA. There's just so many fans of ADA. XRP has fizzled by market cap. It must be said. We will update you on that as well. Ethereum hasn't had a great bull market so far. BNB has probably been one of the stars, but you would say Solana and Ton for this side have probably been the best of the rest. Okay, so let's have a look at XRP, seeing as I brought it up. We also owe you ETH, so let's go and do ETH first. It's the bigger token. So we do ETH and we also do ETH-BTC. So again, there is Ethereum. And it too is setting in a very similar structure potentially. But again, we feel it could pull a little deeper. You had a super impulsive candle there that many people missed. Falling wedge, failure to make a new low, 3 impulses. Little break, small pullback, mega surge. Then it was tops, and that was just kind of a head and shoulder, I'm afraid to say, at the localized high there. There you go, your spiky left, your end up head, and then your grindy shoulder with a grind line you could have got in early, and you have performed to target already, but you could go lower. So ETH still feels like it could start bottoming, but it could also come off a little deeper. So there's some feeling that not necessarily all the selling that needs to be done has occurred, and that's a warning. Or you could churn for a while longer at this level. Again, the volume by price, more evenly spread, but very peaky, roughly where we are now. Why? Because you had this big flag here, where you churned for quite some time, point of control through the middle of that flag. And you also have this little spell here as well. So you're doubling up on that. So it's quite an important range, but that could be why it's getting temporary support, but that could fold a little bit and you could fall through the void, and then you could be bouncing on the next level where there's some support at 3,250 and in and around 3,130. So again, there's a possibility that Ethereum could get a bit soft. I like to always look at ETH versus BTC. So we're giving you a big update because we haven't spoken to you in a bit. We're covering a couple of the big guys, and it's to answer what's the big old story with crypto. I'm going to take the jaw off here, the tool, because it's putting in a whole bunch of interesting things that we don't need. So let's just remind everybody on the weekly what's been said. And it's better on Ethereum dominance. But you did have, during this period, a falling wedge out of Bitcoin, something like that. And you did move to the other side of that falling wedge. What's more interesting is ETH dominance generally, because Bitcoin's been quite a difficult taskmaster to beat. As I highlighted, it's actually been the Bitcoin bull market with the exceptions of Sol and Ton. It's actually been the Bitcoin story by market cap. This is, as we've expected, our suspicion of an upside setup. Again, already got one big bloated second impulse that looks like it's finally based. That surge in ETH got it back into the midpoint. We actually see it going up, and we could see it even run or test or get close to the 20 before it pulls back and then breaks. So Ethereum in due course is likely to outperform Bitcoin. Yes. And it doesn't feel like that because no one's talking about ETH. There's no real hype. Yes, there's kind of like an ETF. It's kind of like, oh, everybody, oh, thank you. That's nice to know you're copying Bitcoin. Oh, okay. It just hasn't been that same resurgence. But if you were to get an upside target, that could see in and around the 28%, which would mean quite a dominant ETH period. And it's actually not been superstar. So you remember the ETH euro, we've shown you in other vids. That's why it's churning. It hit a big target on that, and it's in progress decay. And actually, it's been in progress decay for quite a time. And that's not been helped by the fact that Bitcoin lost some of its mojo. So this was that draw that we showed you some time ago, and that gave you that target up and top, round about there. And that was your run. Boom, boom. Failure to make a new high from the 21 highs. Bitcoin has, in dollar terms, not CPI adjusted, but this Ethereum is not in dollar terms or euro terms. We are looking at the euro at this point. So that's ETH. But an overperformance spell to come for Ethereum, just as everyone's getting bored and thinking, what have you done for me later? So those that are in ETH, I think your day will come. So Binance, let's just go over Binance. So we were right and wrong. So we were absolutely right that Binance was the relative overperformance strength. And it absolutely delivered that. However, the loss in power of Bitcoin, let's get all these lines off. I really don't want to draw more lines. Can you stop that now? Thank you. And let's take them off and move the chart. That's what we were originally trying to do. So Binance did make a new high, and it's one of the rare alt tokens that has. So the bias to hold and suggest Binance has been accurate. It has overperformed the other alts. Just to highlight this fact, outside of Bitcoin at 1.27 and Ethereum at 427 billion, you remove Tether, the next most significant token, in other words, the second alt by market cap at 86 billion, and it traded up to 100 billion not so long ago, has been Binance. Solana is a good 25 billion less. That means it would need to do 40% while Binance does nothing to get to equal what Binance is. And that's one of the most highest performers of this bull market in Solana. Then you have another Tether, and you're at XRP at 27 billion, which to get to 86 would probably need to do more than 3 times, whilst Binance stood 100% still. So think about that. XRP would have to go up, not 100%, which is double, but 200%, which is actually triple, whilst Binance stood absolutely flat, just to get within similar levels. And that would get you 60 plus 3 times 7, 21, to get you to about 81 billion. You'd still be 5 billion behind. That's for XRP to get there. And XRP follows Solana. Then you're getting another 10 billion down to Doggy and Toncoin, and Cardano now another 4 billion less. There was a time when Cardano, XRP, and it was DOT and Solana were all the very similar market caps. So this shows how much Solana has outperformed Cardano and XRP, and definitely DOT, which is outside the top 10 and now sitting at 15 on only 8 billion. And Binance was 100 billion a week or so ago. At 86, it's a bit off, but compare 8 billion to 86 billion. And this is the relative value that is huge that cross crypto valuation gives you. So we were correct that Binance is an overperformer. However, because Bitcoin failed, and this is a really important distinction to remind everybody of the problem with trading alts. So here's the problem, point of learning coming up right now. It might sound real basic and deeply understood, or it might be new to you. I don't know which one it'll be. But the problem with trading any alts in the crypto realm is that the God market is Bitcoin, and at any point where Bitcoin is going down, your alt idea in a beautiful setup that is ready to go up will fail. You actually have another point of failure. It's not just your token that could fail, like when you're trading Bitcoin. It's your token could do well, but Bitcoin could fail and cock up your good token's ability to do well. And in actual fact, this broke exactly as we said. It didn't, however, make our final target. And we gave 727 and 751 as potential targets. And that high there did not meet either. If you look at the high, you're at 721.8. So kind of close, 722. But it actually round tripped. So you would have made money and you would have watched a lot of it wash right back, depending when you get in. If you got in over here, you would be square. You would have had a nice old round tripper and gone. Most people would be a little bit down. Why? Bitcoin stopped allowing alts to run. There are rare occasions when alts can run even when Bitcoin is going down or is soft. But generally, if the God market is crying and stamping its feet, it's raining and getting a little bit unstable for the rest of the alt tokens. And that's exactly what happened. Despite BNB still being in its original range, while most other alts are quite a bit lower. That's due to the relative strength, the upside HVF gave it, that saw it first break up, and it's now taken back that positive gain instead of going into the red, or marginally, for some of you, marginally into the red if you're later. So the minute we saw Bitcoin is not playing the game and had a double top, we closed our Binances and our TONs. We also had TON on. We didn't discuss it with you. And TON we actually locked profits in. This one we gave a lot back. But we waited to see. Will Bitcoin make it? Is it going to turn? Clearly it started to break down on that double top, on that localized second high. And we said, cut and run, keep what you've got, don't allow a loss to get bigger. So that's kind of where we are right now on the big majors. XRP is one we've spoken macro, and we said it'll come round the mountain when it's ready. And I'm going to update on that. Again, remember though, XRP will probably need an alt run, and will probably be part and parcel of news driven. It is a proliferate token, so lots of people. So when we talk about XRP, here's also what we're going to get. And there's a guy watching this video right now who's getting ready to type up this very comment. Oh, you're all fools. It's a proliferation token. They just keep issuing more tokens. You know, you're fools and you should be in something else. Words to the effect of. And buy this token instead, and then mentions an token of some relevance or no relevance or whatever the case may be. I'm looking for Bitfinex. Let me take the T out. In fact, there's one other, I think Bitstamp, that's the one. And I want to criticize someone else who's been posting on XRP. So the interesting thing when you get XRP is that there's occasionally, every now and then, someone who's posted, and I want to try find that post, and then when I say criticize, it's not like attack some other human being. It's here's our methodology, and that's what we don't like about their specific methodology. It's principle based. I get so many people that are taking things personally on X when you go, we don't see that way. This is the principles we follow. We think that breaks a principle. It's not an attack on an individual. It's a, hey, here's process, and here's why we think that process is valid, and that's why we do it. The typical response of unsuccessful people in the world is to respond angrily and to lash back as if it's a personal attack on yourself. It's very common that. And the most successful has been shown, people in business and the world, are people that can take criticism of a process and amend and addend their process and continue to refine it and get better. That is advancement and changing and saying, I tried that, it didn't work, there's something I need to adjust, there's something missing. These are people that ratify, look scientifically. So I want to have a look for that XRP article, and let's just see if we can get news. Where is that now? Okay, yeah, I found the article. Unfortunately, they've removed the charts. So in our draw, the charts are missing, and that reduces my critique immensely. Essentially, here's what they did, and here's what I'm going to say. So you're going to have to take it at face value. They were drawing a channel. You can see the article referred to a channel on XRP. And the criticism I have is you don't get a channel with 1 point on it. And that's what they've done. You should never have a channel with 2 points. There's no trend line with 2 points. Most places you can draw 2 points. There I've chosen 1 and 2. That is not a really valid trend line. It's not been highly validated. I've chosen the current point right now, which could still be walked through. So that's doubly bad. And B, there's only one other point. So 2 points of contact is typically not suitable for a channel. They had drawn a line like that, and then they drew another line that is parallel for the channel along the line here. They drew another line. Let's just go and rub that one out. I didn't do it that parallel like this. Essentially using this and making it a parallel line to the double one. So firstly, this line would make this a broadening structure, not a channel. So those were not part of the channel discussion, although they were drawn on the chart. This had 1 point on the trend and a very high extreme point, and was saying that's your channel. You can't draw a channel with a 2-pointer, especially if you're including the presence, which could be walked through very soon, very risky. But even more so, you can't draw a channel line that's just parallel to the other one through a single point. And that's exactly what they had. The key part of this chart is that, so let's clean its face, is the fact that that squeezed and then broke, and the fact that this is squeezing in a similar but larger scale way. That is everything about this discussion. There is insufficient otherwise price data to do any form of channel drawing. And you should have 3 points, not one, none of them including the current location, which could inevitably change at any moment. So this is inherently our criticism of the chart you didn't get to see, that I saw yesterday and said, I need to pull that up and mention this to people, because people read. These are articles that are being printed up that talk as if they're great experts and that this is meaningful technical analysis. And I'm not the guardian of all things legitimate in technical analysis, but I am interested in people not getting destroyed on bullshit. At least let the hypothesis have some validity if you're to lose money on it, and increase your odds of actually making some money by not being sucked in by bad TA. There is no channel where you only have 1 point. It's an absolute untruth, and it's utter speculation to draw that as a channel and go, and there's the other parallel line running something like that. It's an absolute untruth to put anything forward like that, and it is largely laughable, but it happened. So the structures are squeezes with staircasing moves, and it's quite common to have staircasing price action that looks like that, and sometimes they can be smaller and then they can move a lot further, and sometimes they can be longer and move a whole bunch. And you kind of get these staircases, and there may not be a channel that you can curve fit perfectly across the lows or the highs. It may not exist to be able to do, but the fact that you're getting volatility squeezes remains interesting, and it is continuing to squeeze, and it's the longest squeeze it's had in ages. Don't forget, bull market there, you're at almost, you were almost halfway to $4, right down to 11 cents. That is huge volatility. This in percentage terms was equally huge at a much lower level. Now we are where we are. Some people also say the proliferation. So let's refer back to that comment. Here's the thing. If it's going to play a transactional role, there needs to be a lot of it about in many countries and places and corporations. So what hurts you now is this ongoing proliferation. But what ends up making it an industry standard is that it's proliferated and being used by many businesses, individuals, and is held across border in many different countries. Having gold, but it being so rare, well, platinum was more valuable than gold. Having platinum, nobody receives platinum as a medium of exchange. It's too rare. It's not proliferated. The average man doesn't have it. That's why silver became the people's money, because there was enough of it around that people could have coins in silver and it would mean something. And then they proliferated by people, and they proliferated money so much that silver was too valuable, and you got brass and copper in your coins, and then eventually nickel and all forms of hybrid coins. So that's what's happened. And this is what XRP is potentially doing by having to distribute. And what sounds overtly negative and is keeping a cap on it now, could actually see it be utilized and proliferated as a tool. And once everybody starts using it and much more people need it, and they're big hubs that have it, its price could be bid up quite substantially. It's just a thought for you to have, for all of the people that are going to say, it's proliferated, Bitcoin is scarce. They'll say Bitcoin is scarce and you can have sats, so there's 21 million Bitcoin. Well, then it's not scarce if we're counting sats, because then you've just added 8 zeros. You know what I mean? So, okay, admittedly, if it starts getting used, sats will go up in value. But it's not the transactional choice. It's the digital gold choice. To leave it in the locker and forget about it. People don't spend their Bitcoin. They spend their dollars. They keep their valuable stuff. I don't spend my gold. I don't spend Bitcoin. Okay, so something to think about for all that are in there. XRP can still be valid for the setup that we said, but how are we to know how long it stays in a range like that and then squares up and stays in a range like this? And if we were to get a sell-off, how far would it fall? This becomes invalidated for me if we run these lows. And I've said it before, and I'll say it again. It's in and around the 28 cents, I believe. At the point that you run that, I think that the idea has now definitely been probably spoiled, or the can has been kicked so far down the road that it's only a possibility on the next bull market at best, and could fail entirely. So it's got a time frame, and if there's a demand destroying event at 48, it needs to stay above 29 for me. Were it to go lower, it hasn't failed absolutely. This would just become an ugly second impulse with a lot of zigging and zagging, and this becomes kind of big. If it runs that, it's an absolute fail. So the 11 cents is, it ain't an upside HVF, and it's gone. So people will ask me, what are we doing? Do I have XRP? The answer is no. I've got no cryptos right now. And we speak of blue pot, orange pot, and red hot pot. You'll learn more about that. Click the link below to book. We're here to help you maximize your crypto gains during this crypto bull market, which has gone a little bit quiet and had you all confused. And it's when you're quiet and confused, and it's at times like these that you are thinking of other things, you go to sleep in the crypto markets, that slowly things are building and major moves are missed. And they could be in both directions. But this is a macro bull. And long run, we expect Bitcoin at new highs. We expect an alt run in its fullness to have taken place. We have already said that at some point Ethereum will outperform, potentially moving to 28% of the market cap. And we expect there's still a realistic chance that XRP could have a substantial major move. Remember, at one point XRP had a higher market cap than Ethereum. It's not to say that it'll happen again, but a major move could bring it very much up from the 7th place that it currently sits in. So we've covered BNB, XRP, Ethereum, and Bitcoin. We also looked at the totals 2 and 3. We pointed out that the alt market generally hasn't happened relative to the Bitcoin dominance so far. Why you always start a bull market with some Bitcoin? Because the God market moves first, particularly when the ETFs were to be the driver. And most people were looking for Bitcoin in terms of that ETF. But the second half will give opportunities in those tokens that have been relative strong. We will talk to you about TON, and then we will close this one. And you've had a good session with me, having not heard from me in a bit, as we've been quiet and in the hills. So the nice thing about TON is that it's been an overperformer, so we can finish on something that's pretty positive. I'm not sure OKX has the largest history. I'm not sure how much has KuCoin got. It's got even less. So it got out of the frying pan into the fire there. Okay, so this is TON on the weekly time frame. This is the daily. The interesting thing about it, despite it giving back much like Binance, its recent gains, almost 100%, it is an outperformer as well. Had an excellent run, 1.9 up to 7. That's a beautiful run. I wish I could say I got 65% of that move. I didn't. It had its correction whilst Bitcoin corrected. It went super low vol here, particularly this little period here, and that saw it pop to the upside and pop again on that falling wedge. And then Bitcoin stopped playing and it gave that back. However, overall, if you've been a long-term holder in it, it's been squeezing higher in spite of bearish general market conditions. However, if Bitcoin has a sell-off and the alts do, I would expect this rising wedge to break to the downside as part of a correction. However, if Bitcoin from now starts to trade up, this is still going to be one of the overperformers. And I've found this every bull market, and I've now done a few. The ones that move early, hardest, truest are actually the best tokens for that bull market, and it's better to get into them than to roll and say, I missed that one, but I'll chase a Litecoin, original generation token that's kind of hasn't moved near as much. Actually, the ones that have moved for the right reason, usually, and they will still overperform from their higher elevated. And there's this contrarian thought that you must buy the ones that are really near the bottom. The reason they haven't moved is because the money is not looking favorably at them. And money comes in walls and waves and continues to chase in. So counterintuitively, the best performers are often the best ones to buy. Not in a FOMO point, when they rest and pull back, go back for the ones that have been very strong during that bull market. And ADA, in the previous bull market, actually was an early mover and was very dominant and did very well. So it's just highlighting its relative underperformance this time around. Okay, so we've had a look at TON, looking good, but I would still, if we sell off, watch for that. We didn't have a look at the dollar, and I'm going to give you my take on the dollar. And here's the problem with the dollar. The dollar index is in what we've called for a while now the watermelon smile, which is a grin of glee and burgeoning strength. In short, while people are sensing weakness in the global economy, the dollar is bid. This is your rounded bottom. That's your watermelon smile. There's a split there, some crooked teeth. You had a correction. You came down super, super hard. You had a run, a technical test on the 100. You had a violent reaction to the top. This is your biggest tooth, which had a fairly sizable down. And since then, you've been working your way up. Again, another little rounding here. This is assertiveness out of the dollar, and I would imagine you make a higher high. That's right, on this working your way up. And that's not good news for crypto generally, guys. So that lends potential credence to a little bit more downside, possibly a bit more, or new drivers that will keep a bid coming into crypto in spite of a firmish dollar, so that ideally then the dollar doesn't get too strong. What's the localized high there? It is 106.5, and I feel that you probably run that, but not immediately, not super. We're not calling a mega spike, instantaneous shoot up. We're calling consistent building, as it has been since this low. Consistent higher lows, 1, 2. So there's your absolute low, higher low, higher low, higher low, and some of these localized highs being taken out. So 106.6, etc., to the high side. That is going to be a headwind for crypto. Hence why a potential crisis may be needed first, and we have a downside spill on all crypto, and that is why I am neutral, square, flat, no exposure. That's right. In spite of it being a macro bull market, you could have a major correction with overall economic weakness all around. Retail not participating, institutions nervous, and a bid under the dollar. Okay, now you've heard it all. That is your halftime on this bull market that could have a little bit of a disorderly spell in it before it reasserts again. Till next time, we look forward to catching you. Don't forget, first link below, book a call with us. What do you get? What's the idea? Why book a call? Why do you want to speak to someone? You don't even know who you're going to speak to. Well, first of all, we have 3 amazing people, one with an American accent, one with a Scottish accent, and one that sounds a bit like me. And they all by zone to talk to people that are of that time zone, and they are people that purchased are ahead of you, that purchased and was thinking, what will I get, just like you are thinking, and became members. So there isn't anyone who's a professional salesman in here. They're here to show you with kindness what it is we do, what our platform looks like, which is something we've invested quite a lot in, and it's designed for you to have a learning environment, a trading environment, and an opportunity to chat and engage with your peer groups in all the market segments, so that you can't sit talking gold and someone else is talking Bitcoin, and someone else wants to talk about doggy and somebody else is talking about this particular oil stock. So it's segmented in a manner that you can enjoy your interactions with like-minded people who are currently engaged by that area of the market. You can have a look at particular setups, and I will show you one from one of our joiners from this year, whose name is Panos. He doesn't mind me making him popular, I hope. Yeah, I think so. And he's posting a small cap crypto. Now, I don't endorse, I love speculating, but I don't go on YouTube and talk about small caps, because there's a lot of people that have manipulated small caps in a bid to and earn money out of pumping junk. So I tend not to talk about small caps. That doesn't mean we haven't had a speculative trade inside of our community on something that represents a bit of interest. That is Pendle versus Tether, which is on KuCoin. And it's something he has made the case for, with falling wedges, upside HVFs, and a draw. So to respect that particular individual, and the fact that we've now given you a freebie idea on a small cap crypto, we want to say goodbye to the Dixie and hello to the Pendle. And there you see it looks like it exists on Binance as well. Now here's a very interesting thing about what Panos has brought to the community. And you can see this, that when we look at cryptos, we also do big time frame candlestick analysis. What is a candlestick? Well, it tells you what's happened. And this has been a tap out, a bit of selling on the wick there. You didn't close at the high, you then, that momentum carried into here, you had a down leg, you closed at the low, then you got a spinning top, which is a fairly small body with a little bit of test up, a little bit of test down, equal amount. That is pointing to a reducing momentum on the previous candle. Do you see that? Then you get this. This is a hammer. That means you opened here, you tried to sell off, the market rejected, returned you, and then pushed you, and you closed on the high. What happened next? Another hammer, small body, deep attempt again to rush you out. came all the way back up to the open and some green candle quite close to the high, small wick above. So actually, on a weekly time frame, looking at this newly listed, only from July of 2023, the recent candlesticks showed a bit of exhaustion, a strong sell-off, an indecision but still generally selling off, but equal wicks on either side, a reduction of the selling momentum, followed by a test to the downside that was entirely rejected, hammer 1, another test to the downside that failed to run the previous low, giving you a tweezer bottoms of low which guarantee a support level in and around the 4.7. Yes, Panos. 2 hammers. And also providing on the macro time frame, squeezy, Japanese squeeze across, reducing highs and higher lows, pointing to a volatility squeeze that could have a narrative or some money that will chase in. And I have no idea what market cap. You can go and have a little look yourself. It's Pendle, Tether US, on Binance and KuCoin. So then we drop to lower time frames and we get a little bit more detail, but I've already given you quite a decent idea why it's potentially interesting. Little bit of a shooting star there, a little bit of a drift down. Crypto has a rest. It can come back down. It can maybe make a lower low or just test this level again, or just come a little bit down and then get basing support, maybe make a W bottom. The thing is, there is the beginning of DNA. 2 very good impulses. The third is very subtle and small. That's what we watch for. We teach you all about that when you book a call on that first link below. And what do you get? You will get all the webinars that we do regularly, recorded in case you miss them, with summary sheets. Sometimes you just don't have the time. We know that. You can listen at 2x the speed. You can see the setups that come out of the webinars. Here the recording. When is the Sunday session? You got it right there. The USA session, the crypto fine session. You can engage with Panos on this particular fine. Good job. Let's wait for the number 3. For the third. You can chat on that specific setup. You can share fundamental information. You can go into chat rooms to talk about crypto general. You can attend and learn and bring your own ideas. You can practice. You can study the course materials, do the quizzes that are about there, talk to the other gentlemen with their chart shares, with the specifics of all things crypto going on in here, sharing tweets and other points of information, draws and learning. Then you can go and make sure you've done all your coursework. HVF revealed, HVF refined, HVF rewarded. Start at the beginning with the basics, then refined, and then maximize the reward. This is how we do it. Early entries. All the many techniques recorded very high end with Madonna microphone and on a Pearl, so that it is excellent audio with slides and made for you to facilitate your learning. Watch it on an iPad or a device. You will have an app on our phone, on your phone, and you will be able to get notifications on all the things you wish to be notified on and none for the things you don't. It's kind of cool that you can go through all the content that we have put aside. You can see which partners we use in terms of how and why. You can check all the events, all the recordings, all the forums, so much more, and engage from your device, your hand, and your desktop. You can post learning setups yourself to help improve your skills and get feedback from the other community members. This is what it's about. This is not Slack, Discord, WhatsApp groups. Nobody is getting your email. No one will ever mail you. We have never rented our sheet. It's our client's list. So this is what we're about. Privacy, learning, trading, skill set development, discussion of trade ideas, and segmenting conversations so that the right people get to speak to the right people about common interests and current market conditions and the markets they are wishing to trade, whilst being fed regular ideas, not just from myself, but all our top guns that are doing webinars across each week and on weekends that are recorded for you to watch anytime at your choice, at any speed you like. Regular updates from me on leaders, which include voice, video like this, and many other aspects, all of our thoughts at that given time, plus data and what to watch for. This is how it is in a very simple WhatsApp type structure. Okay, you know what we're all about. Book a call, have a chat, confirm this with the people, get pricing, and you now know what it will take to become part of our community. By the way, there are payment options. There are also reduced programs that are self-study at a lower cost to meet budgets. And the end goal, all these are features. What are the benefits? The end goal is you maximize your wealth building during this crypto bull cycle on the basis that we are in a world of reset economics where your current fiat in your bank account could be whisked away at a moment, where you should be expecting attack vectors from statist actors on your finances, socially, security, tax, jurisdictional, on multi-levels. We encourage the 5 flags strategy to diversify your optionality as to where you are resident, what passports you travel on, many other aspects of 5 flag theory, all within offboarding crypto through key exchanges to banks that know and accept those crypto exchanges as national carriers, and will allow you at the end of the bull market to offboard profits made, capital gains tax-free, potentially if you follow the steps, totally legally, with the outcomes taken to your bank account that you could buy property and any normal transactions that require a great deal of KYC through your crypto gains. Also, opportunity to trade other markets such as gold, silver, coffee, and many other things we've done very well with recently. So I've done a longer brief of this. I tell you why I've done this, guys. If you're still watching, we're your guy. You are our guy. There's some people that are intimidated by making a call or think it takes too much to pick up that phone and make up a call. And I'm giving you a small segment of what will be shown to you and an idea, and I want you to hear it from me. You're going to hear it from someone else, and it's going to sound very similar in content. It'll be a different voice, a different face. You'll see them, they'll talk to you, they'll be interested in you and what you're succeeding. We have turned down, I think it's about 6 people now, just for lack of suitability in terms of nervousness, insufficient funds, even though they were going to borrow to come on and do various things. This is something that smart, calm minds undertake to maximize their wealth. Don't book a call if you're nervous, you're leveraging your car, your house to get on, or you've got only $3,000 in your trading account. This is not for you. Carry on developing, grab the free stuff from YouTube. Eventually maybe take a self-study, you can upgrade, and some credit will be given to you at a later point. But this is what we cover in our calls. I've taken a longer time to detail this for you so that you can hear some of it from me in person whilst showing you our platform. And let me say the good times are going to return in terms of market making. Good times might be good times in terms of crypto, who knows what will be going in the real world, but the opportunities are going to absolutely keep coming and delivering, and we are one of the best. I know no one else who will, from a technical reason only, no tip-off from somebody on the inside, for technical reasons only, will identify the strongest relative strength cryptos for the next phases of the bull market using technical methods developed by me over 30 years of practical experience in the markets to help you maximize your upside, and also when you get to that upside to ensure you do not give 80% of it back by hoping, praying, doubling leverage and doubling down when the market has told us it is done. Getting out at the right time is going to be as critical as participating in the best tokens on the upside. It's my core job to give you the guidance to best achieve that. And that is what my goal is on a daily basis for all my community members. Until next time, thank you for allowing me the privilege of just giving you a little bit longer tail chat. We get some people that book and then don't show. Please be respectful. Don't book if you're not ready. We don't need you there until you feel ready. Feel ready, then respect the person on the call. this is some of what you'll hear. Until next time, thank you very much. Play it safe for now in the crypto markets is the message. Bye.